right. That is something which will be watched out for. Siddharth, Sakshi, and Mr. Gandhi, stay with us because we are going to take a very quick break. But after the break, we'll continue discussion on economic survey. All right, welcome back, and we're in critical conversation with regard to everything that's come out in the Eco Survey 2026, and we have with us Mr. R. Gandhi, as well as Sakshi, as well as we have Sanjeev as well, who's with us. Sakshi, let me come to you, and let me put things into perspective. We've got plenty of uncertainty geopolitically, and therefore, the last year or so, we have had some impact with regard to government revenue. The government has given benefits to consumers, and that flow through has already started to happen. The pickup also has started to happen. How, in your opinion, is the government going to fine balance the budget, and how important is the fiscal deficit number going to be in an environment like this? Should the government prioritize pushing out heavier Capex and thrust on consumption, or should fiscal discipline be maintained?
Right. So I think that the ideology with this government, how I read it is that there is this focus towards consolidating the fiscal deficit at the central level. I think that is a strategy that has its own merits. And I think that the government is likely to continue down this path. And this year, they are going to start targeting debt to GDP ratios, right? So we are estimating that they are going to target a debt to GDP ratio close to 55% of GDP, currently from 56% estimated for FY26, which should boil down to a fiscal deficit number of 4.2%. I think that this number should allow the government space to at least maintain, the capital expenditure targets anywhere between 11 to 12 lakh crore, which is still a significant number. Although I don't think that they are going to kind of target very high double-digit growth on the capital expenditure side. And, clearly, as Siddharth was talking earlier, I think the buck is now going to be passed to the private sector and getting more private participation in the Capex revival story for India. Secondly, you mentioned about the tax bit, right? We've seen income tax and the GST cuts. Of course, this has had an implication for the fiscal math for this year. But as we move into FY27, nominal growth is going to start inching up. So this year, nominal growth was just about 8%. The next year, with inflation also kind of stabilizing towards 4, and with real GDP growth somewhere around 7%, I think that at least from the nominal side and in terms of tax collection, etc., things should start looking slightly better than the trends that we saw in FY26.